Good day, everyone, and welcome to session recap. Okay, this date is a little bit outdated, and today is 3rd of July, and we actually are already in potential trade for Australian dollar, and I have a long trade on euro dollar that I elaborated today on my daily analysis. So just to let you know that maybe we don't miss a trade, I am long on euro dollar, and also I have a position long on Australian dollar. So pay attention. I will start the update soon. And here, this is, before we start, as always, standard risk disclaimer. Explaining that CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. So this is not suitable for everyone, and this video is not part of the .co.uk website, but the globalnews.com website. Please read the full risk disclosure on this web address. Also have in mind that the patient is the key to success, and you always need to be patient before taking any entries. Don't rush in. Rules and setups for our session recap. I always need to repeat it, and this is very important for especially for traders who are pretty much new to our session recap and who still don't know how to treat these kind of setups. So first of all, you need to give price a breathing room. Always enter within 15 pips of the predicted level. We call it a POC or buffer zone. What it means? So let's say that the range is, let's say that I say buy around 1.1300. It means that you can buy at 1.1315, also 1.1285, but your stop loss should be intact. Your stop loss should be intact. It's very important for you to know that you trade always based on your risk. Always based on your risk. Very important. And do not move your stop loss, because if you move your stop loss, you will move your risk. Okay? That is extremely important. You need to know that the best trading success always boils down to money management. If your money management is good, if your money management is correct, you should be able to make profits. That is very, very clear. Okay. One of the things that I also want to mention is that a lot of people have been asking me, okay, Nenad, what does it mean, the first touch of the zone? The first touch of the zone is the most profitable, because that is where historical buyers and sellers come in the now moment. So let's say that, for example, that we have a sell trade here at this spot. It means that I have calculated that this spot is the POC zone. So somewhere in the past, we saw a lot of sellers there. So why is the first touch of the zone most profitable? Because as the price grinds towards the zone, right, it means that the first now moment buyers who showed up here will reject the price usually to its most potential. It doesn't mean that the price will not reject when it subsequently tests the zone, but it means definitely that the first entry within the zone is the most profitable, as now moment sellers enter the market and they have larger orders. Only after that you might expect retail traders to join. And guys, I always trade the market as I were a bank trader. The thing is, Camarilla Magdi, the method that I base my analysis and trades on, is not retail trading system. It's institutional grade, prop bank grade method for analyzing and trading the market. So that is why I always emphasize that the first touch in the zone, within the zone, is the most profitable. Even though if our price hits the stop loss, you will usually 90% of the time see a rejection in the zone, at least for some amount. So that is why the first rejection, the first entry within the zone is the most profitable. Paul is asking a good question. Hi, Nenad, do we use pending orders or do we do market buy or sell? I do usually market buy or sell because sometimes, my zone can miss for 3 or 4 pips. Sometimes instead of hitting the zone to the pip, you will see some rejection in the zone 2 or 3 pips shy from the zone. It's a pity, right? So you can, let's say, that is why I use 15 pip buffer, but sometimes it will be like, 2 or 3 pips shy. So please, you can of course do pending order, but then check from time to time, see if the price is getting near to the pending order, or let's say just divide your trade. Don't enter with full risk on that trade. Try to scale in if the price gets far in the zone, but don't move your stop loss. I also did, as you know, pending orders, but sometimes my pending orders are hit, so that is why I always try to do with market orders. If not, I put pending orders, yes. But you need to follow the price, because sometimes if the price is volatile, you need to protect your trade. Yes, you have Admiral Markets alarm. You can use it with MT4 Supreme Edition, and definitely it will be helpful. Okay, let's move on. I know that you are a bit probably impatient to see setups. I will be fast with this. Positional trades, trend trades, alternative trades or counter trend trades, breakout trades, scalp trade levels can be traded independently of any position. Also, guys, depending on time and volatility, this is important. We use profit stop after 20 pips, not less. Session recap setups are valid for today, tomorrow, and sometimes the day after tomorrow. Pay attention to my Twitter updates, because sometimes I might do an update or two, but it's not very, very often. But sometimes I might update my analysis and trade setup. Add these levels to your system. They're strong. Pay attention to trend. So if you miss my entry, go with zoom into lower time frames and try to find trend-based entry on lower time frames. Pips pool, the term that we use, it means the maximum available number of pips you could have made on recap entries. Okay, I will answer your questions, guys, just a little bit later. Now let's get on with our webinar. Past week results, 26th of June 2017. Euro dollar alternative trade was good for 100 pips, and that was the trade of the week. Pound dollar positional trade was minus 25 pips, but breakout trade was good for possible 125 pips. Australian dollar alternative trade, 35 possible pips. Euro yen positional trade, 60 pips. But you can see that I put in the hyphenation analysis. That means that I did the analysis for that day that also showed profits. So some people who actually took the analysis that I posted on Admiral Markets website could have made 60 pips. Those people who traded strictly from session recap, probably they didn't get into the POC, because POC was slightly lower than my analysis, because it changed during the day as the price changed too. But yet again, it was a good one. Pound yen alternative minus 50. Total pips pool 245. Trade of the week, definitely euro dollar. And this is it. Euro dollar, I said it was ranging, but well, you can see I said buy around 1170. If you bought the price where I said, you could have made even more than my projected TP was. Here you can see that euro dollar went heavily to the upside, and I said really I enjoyed my euro dollar trade, and I am also long on today euro dollar. I will show you also the setup. So let's see. Euro dollar has been a bit of grateful for trading last couple of weeks. I mean, it started to move. It's not moving too much, but still better than it was like 3 months ago. So euro dollar was good for, well, I said 100 pips, but you can see here, definitely it went 300, 400 pips. Well, not 400, but 300 pips above my entry. So this POC zone was simply the best POC zone you could have seen on euro dollar, wherever you traded, wherever you read on the internet. This was the trade of the month. The POC zone for euro dollar. When everyone was selling, I told you guys, go buy euro dollar. Well, this was a bit low also, so it was like, I had a help from Mr. Draghi and ECB, but yet again, technically, this was the level to go into a long position. Pound dollar. Well, the pound dollar was, it had both a loss and a win. The loss came if you tried, as I did, of course, to go into this sell position. The problem with sell position was that the price broke heavily to the upside, retesting my POC zone. So that is why I'm saying, guys, even in a loss example, you can see here how the price retested the POC zone before making a Marubozu breakout to the upside. This was huge. But where did retest come? Within the POC zone. You see, it could have happened that also this POC zone could reject the price. But well, it went to the upside. You see, no POC zone here, and it proceeded upward. But I also said, buy breakout, 28.25. So what happened here is we had a positional loss, but then if you went into a buy breakout, you could have made tons of pips. Next trade, Australian dollar, it was the ranging, but yet again, I said sell around 76.15. After I gave you a trade, well, you can see here, exactly at this spot, Australian dollar started to reject. It was a London Open, I think, during next day. It rejected from the POC zone. Well, you could have made some nice pips trading range bound, low movement, slow movement, and very low ATR Australian dollar. Still, for how it moves, this trade is very, very good. Because Australian dollar moves very, very slowly. Euro yen was good to go long, but as I said during the recap, we had a 124.30, but I also said watch for 124.50. None of the above was hit because the price went to 124.73. What it means is that people and traders who actually took my trade from the daily analysis that I put on, as I always do, Admiral Markets website. Here, I will show you. Let me find it. Analytics, technical analysis here. Here, technical analysis. Next page. And here. So traders who took a trade here within the zone could have made some pips DT retest, because this price, the price went here, retested it, and went upward. So it for traders who wanted to trade this, it was shy from this entry, but for traders who already were in a trade, they made profits. Definitely they made profits. So here you see euro yen here, and definitely it came as the analysis said on June 26th. Okay, so the result for the previous week was possible 245 pips with a lot of wins and few losses that happened on pound dollar positional, pound yen alternative. Everything else was a win. Still good considering that we are in a holiday trading mode. Okay, now let's move on to this week's setup. I'm long on euro dollar, simple as that. Okay, I went long around 1.1360. My stop loss here is 13.15. So I am long, as my analysis said. This is TP1, TP2. As I say, whatever happens with this trade, I think if the price wants to go up, it will go up. First of all, I will show you the chart. The good thing is that if you bought euro dollar, well, you bought it at the POC zone and you actually bought it at support. So let me open. Okay, I need a few moments. Then I will log in. So you can actually see the euro dollar trade. Okay, just give me a few seconds. So pretty much clear. 1350, 1335, 1365 is the POC zone. Okay, but you actually need to leave your stop loss at 1315. 1315 should not be touched because that is a stop loss for this trade. I will now show you the chart. Okay, it needs a few seconds to update. I'm running multiple monitor setup. A lot of charts here are open, so give me just a few seconds. It needs to open. Now I need to log again. Okay, until it okay, here it is. Yeah, here it is. Okay, and I just give me a few seconds. I need to add my indicator. Okay, and this is it. So euro dollar here, this is the POC zone, as you could have seen also on my analysis today. Okay, so it's WL3, it's EMA 89, it's daily L5, and now also if you place a trend line, you can see that now the price is actually rejecting this trend line. It started to reject it and it's going upside. Okay, it's going now. I mean, it's not going yet, but you see, these are rejection to the upside. You could also read my analysis here on Admiral Markets website, and it also explains why I did a long setup. So this is the tool you can have in MT4 Supreme Edition. So for all of you who still haven't downloaded Admiral Market Supreme Edition, go and do it now, because this is very useful tool that allows you to place a daily chart, or you can do whatever time frame you want to inside your trading time frame. Camarilla MACD method and system is solely traded on euro dollar on a on a 1 hour time frame, and everything can be traded with CAMACD. It's equities, forex market, cryptocurrencies versus dollar, and so on. So you can see here 61.8 WL3 ATR low, EMA 89, DL5. So this is daily support, weekly support. The price is above weekly support. It's bullish. The price has made bullish Marubozu breakout. So in my opinion, the price is bullish. Why did I put my stop loss below 1315? Simply because, as I said, if the price breaks, it could go a little bit more to the downside, but I want to keep it below this low here. So it's still like 50 pips of a stop loss. My risk is 1.5%. So don't forget that you need to calculate your risk. So I am long 1360, 1315, and I want to aim 1470, 75 potential retest. Maybe I want to see this one too. But yet again, I will also watch how the market is behaving, and I will protect my trade once I'm in some nice profit. So this is my euro dollar setup. Pound dollar setup is buy around 29.00, stop is 28.55, 30.50 TP. This is an uptrend. in pound dollar, sell 30.50, 30.80 is stop loss. TP is 29.50. 50, sorry, not 15, but 50. So, well, what can I say? It might reject a little bit earlier. So I'm not saying that it won't reject on a retest of this zone, because it's the POC indeed. But what I wanted to emphasize is that if you take a previous swing into account, most obvious swing, this is, let's say, most obvious swing if you take the last swing low to last swing high. But this is basically the POC zone, right? So I'm saying that the price could reject from this zone. I'm not saying that it will, or that it might, but now I was a little bit, I thought if I go long here, I still need to put my stop loss a little bit lower. So that is why I decided to actually count this one as potential POC zone. Tomorrow we will see new levels, but yet again, if you take this swing, you will actually see that 29.10, 29.15, 29.00, and 28.85, that is the POC zone, guys, is actually also strong zone that the price could reject from. So if this gets there, we will see tomorrow this will be another level on Camarilla. But also what we will be seeing here is buyers. We saw a lot of buyers in this candle. So buying started here and a lot of buyers joined up. So I think that this zone would also reject the price. So it's twofold. It will reject from this spot that is currently rejecting now, or it maybe will go lower and reject there. Well, I picked up this level a little bit lower, but as I say, it could happen. Maybe it will, maybe it will not, but yet again, I still need to see what the price will do in terms of daily close. So whatever happens, I will be ready to buy a little bit lower, guys, if it gets there, because what we are seeing here on pound dollar is uptrend. I mean, this is uptrend, definitely. No need to think twice. Price is very bullish on pound dollar. It needs a retracement because, as you know, every trend needs a retracement. Now you see euro dollar is 69. So now currently my position is 9 pips in profit. But maybe you also entered where I told you to. So another trade that I'm in is Australian dollar. There is positional buy trade at 76.35, 75.90 stop, 77.20. This means, according to the rule that I always repeat and that I always say, the POC zone rule, you can enter 76.35, 76.50, and 76, right, 20. This is the zone. But you need to ensure that your stop loss is intact. That is why scaling in is very useful when you trade institutional grade analysis and methods such as Camarilla MACD. Because then what happens is, if the price gets in the zone, you can scale in. And we already did a webinar about scaling in. Your profits rise exponentially when you scale in, and your losses go exponentially down when you scale in. And this is final TP. Sell is 77.20, 77.50 stop, 76.50 is TP. Now, let me show you the chart. And now still, for all of you who are wondering where I put my analysis and where you can trade these setups, very easy answer. Admiral Markets website, and few times per week, of course, Forex Street, joint cooperation. We do it with Forex Street. So you can always read my analysis, and you can always come here on Mondays on this live session recap, and on Wednesdays where I put live trading room. Okay. I will answer all of your questions, Ilya and others, just a little bit later, but this question is straightforward. Didn't you say that the president of Australian Bank wanted Australian dollar around 75? Around 75, Ilya, it means that the price still has the room to go to 77, 73, is the range. So somewhere around 75 is okay. And what the governor of Australian Bank said, it was a year ago when Australian dollar settled around 75.00. He said it a year ago. That is why you see a lot of buying slightly below and selling slightly above 75.00. He didn't say it a month ago. He said it a year ago when Australian dollar started to drop. Okay, so basically, what we are seeing here on Australian dollar is now uptrend. So I am long here at 76.50. So have in mind that I am long. So according to my analysis, this is the POC zone. Okay, very clear. WL3, ATR low, ATR pivot, daily L5, EMA 89 is slightly above, but this is a potential rejection above. And also, this is support. So what we do when price is in uptrend and it's oversold, we buy it, right? We buy when price is oversold. You can see our ECS MACD is below 0. So here, it's this is standard variation on MACD, slightly modified to suit my analysis, Camarilla MACD, and trading method. So definitely the price is in territory for a potential buy trade, and this is uptrend. So you want to see price a bit down when you buy. Okay, and here you can see MACD and Camarilla levels are aligned. So price is above L3, signifying uptrend, daily L5, signifying deep level for buying. Here, MACD is negative. It means the price is in a good spot to be bought into. And if you pull unique and my favorite Fibonacci retracement tool, the price is at 50 retracement. That is very, very good for range bound pairs. You see ATR is here. A lot of reasons for me to go long at 76.50. Okay, so let's see what will happen with this one. Next one. Okay, so this is it. Next one, dollar yen is in uptrend. 112.90, 112.40 stop, 114.00 TP, alternative sell 114.00, stop loss 114.30, TP 113.20. So we have a dollar yen trade. Dollar yen trade is in uptrend, and I will be buying a dip into. And for me, very clear, dollar yen, it already overshot this ATR, so we might see a sell soon because you see the pair is it overshot its ATR projection. I'm not saying that you should go short now, but I'm just saying that pay attention. It might reject from these levels and it might go down, guys. That is what you need to take into consideration because healthy retracement is needed before next leg up, in my opinion. So I'm still expecting a dollar yen move to the upside. But yet again, I'm saying that we could also experience buying when this daily H5 is retested. That is what I will be looking into also. Let me just show you a quick look. Okay, let me show you this one. So dollar yen. I expect if the price wants to get down, it should retest this level because this level, you see, it was bought into, but it was bought into today's afternoon. So it means that Asian traders, Tokyo traders, haven't retested it yet. So I'm still hoping that there will be a retest so we can go long. But if it doesn't happen, I'm ready to sell slightly higher, because if we don't see a retracement, it means that there will be another leg to the upside. So the trend will continue. Okay, it means that the trend will continue. So that is why when you trade, you cannot trade just by using indicators that tell you go short and long. You always need to assess a trading signal from your system as a trader. Guys, I just will make a slight digression. The education that Chris and I do with other markets, and the education that we have been doing for you traders, because we are traders, is to teach you really how to trade properly. And now let me tell you, a lot of people are very good in trading their own indicators, their own systems, and so on. But my rule of thumb is, whatever the indicator tells you, whatever your expert advisor, let's say not trading expert advisor, but some expert advisor that shows you indicators, buy and sells and so on, tells you, you need to do your own analysis, unless you have an expert advisor that has money management in place, so it can actually manage your trades. Because there are very good, successful expert advisors that can manage your money, but those expert advisors always have a modified, very advanced algorithm for money management. I'm talking about manual trading now. When you see a sell arrow or whatever trading signal from your system tells you, you need to assess it from trader's point of view to see if the signal is valid. To me, let's say that I see an arrow, sell arrow here. I might go short simply because the price is already above daily high, it overshot ATR and so on. But because I don't use any arrows or whatever, I use price action trading. What I can say about this dollar yen is, if it proceeds to go up, if it continues to go up, okay, it will probably come close to weekly H5. You see, this is daily H5, weekly H4, so this is strong resistance, guys. But you see, now it's not rejecting, it's still going up, right? Well, what it means is, if it proceeds to go up, it should hit closely, not maybe weekly L5 immediately, but 114.00, because that is where banks want to put their orders, around rounded numbers. So that is why I picked 114.00 to sell. So if this breaks, I want to sell here. If we see a retest, there is a lot of confluence at daily H4. Let me show you. This will be a potential 23.6, guys. 23.6 retest. What did I say? 23.6 is always, I mean not always, but it's usually tested in a strong trend. So if the price gets here because the trend is strong, obviously, we could see a buy trade. So 113.05, 112.90, that is the POC zone. Price here, retest, we go up. Price there, we go down. Simple as that. So that is why we always need to assess a trading signal on your chart from a trader's perspective. Pound yen also buying into a dip, but this is Paul is asking, does it matter what time frame we use? For Camarilla MACD, I always use 1 hour. Sometimes I switch to 4 hour when I make a swing position. But what is important, if you trade something similar that I do, then time frame doesn't matter, because for intraday setups, 1 hour is the best compromise between over trading and not trading at all. So 1 hour also gives you hourly candles that should move and give you entries during a day. So it means that if the price, if you watch the zone, then I always watch 1 hour. I don't know, some systems, I mean, not some, but I have never seen any system in Forex market or a method that is similar to my Camarilla magnet. Because simply traders want easy money, they want to make indicators based on their indicators, they want to trade the price. I don't know. I know sometimes it can be good, but because I trade 20 different pairs and I can do the analysis for every single pair, I don't know how to make an indicator that can do these zones for me. So I always do this manually. I always do this manually. So for me, this is the POC zone, and if the price gets there, I will buy. Simple as that. 1 hour time frame I use for charting this zone. Pound yen, I already traded pound yen today. Everything that pound yen did was almost no brainer because it was very, very good, very easy trade because price is moving very fast. Pound yen is strong. So if the price gets around 146.30, I'm inclined to buy it. Let me show you. Okay, here. So I still cannot put the Fibonacci because the price is still going up. But somewhere around 146.30, 45 is the zone. You see? Low volatility zone, Levez, in near-term history. If you don't know what LVZ is or Levez, refer to Price Action Trading School on YouTube, Admiral Markets YouTube. You have explanations for T89 Levez. This was Levez. Rejection. So ATR pivot point order block here. Daily H3 retest. I think the price could go up. Also, I will see when Fibonacci, when I have the opportunity to pull the Fibonacci. I cannot do it now because the price is still making higher highs. It needs to start a retrace. Then I can pull Fibonacci, not now. So at least at this point, also, this is inverted head and shoulders. A right shoulder, head, left shoulder. This is so-called lean head and shoulders. Lean head and shoulders means the price is in uptrend, strong uptrend. Lean inverted head and shoulders. You see there is an angle to it. Left head, right, and the price proceeds to the upside. So pound yen, I would be looking to buy around this region here. So let's see what will happen. So guys, I will roll the slides again. If you have any questions, please do not hesitate to ask me now. Currently, trades that are active are euro-dollar trade. Okay, and of course, Australian dollar trade are active. For other trades, we are waiting the price to approach the POC zone. Okay, now I am rolling the slides. And pound yen. Okay, now let's start with a quick overview of other markets that I have not put into the plan of a trading plan. Ahmed is asking EuroCAD. Okay, EuroCAD. I will be quick because I have a lot of questions here. EuroCAD. Quick look at EuroCAD tells me that the price is ranging. We have a big head and shoulders here. This is big head and shoulders. So the price is ranging here. We are having a rejection from the bottom of left shoulder. So possible sell spot could be here and here. Slightly in the WH3 zone. This is bearish. Australian dollar yen. Probably bullish indeed because yen is a bit dovish at this point. So yen is very weak, while counter currencies such as pound, dollar, and Australian dollar are stronger versus yen. So Australian dollar yen up. Uptrend Okay, on buying, you can buy the dip in Australian dollar yen. New Zealand dollar. New Zealand dollar, bit rangy price action, but this is still bullish. Okay, the price is still bullish. You see fake out, then breakout above this candle. So I think that New Zealand dollar is bought on dips. Okay, is bought on dips. Okay, next question. Euro Australian dollar. Euro Australian dollar. Okay. Here, bit bullish. The price is now, let me see. This looks like it could break to the upside, you see, but it has the potential to test the lower part of this pennant. So bullish pennant on a euro dollar. If it breaks above this spot here, okay, I think it will be a breakout to the upside. Next question. So yeah, dollar CAD, and Raymond is asking, is the euro Swiss still better to trade than euro dollar? Well, I am not particularly into euro Swiss trades at this point. To be honest, I haven't seen it for a while. I mean, I haven't paid any attention in a while for euro Swiss. But no, it's not. It's not good because you see the daily range, 37 pips. This is nonsense. I wouldn't even take a look at a pair that has 37 pips in its range. Next question is dollar CAD. Dollar CAD, as I said, this is bearish. Dollar CAD is bearish. I would be now, if you watched my previous coverage of dollar CAD, I said selling on dip. So selling on dip should continue on dollar CAD, definitely, in my opinion. So selling on, not on dip, sorry, selling on rally. So yes, selling on rally should continue on dollar CAD. Indeed, selling on rally. Dollar Swissy, well, dollar Swissy is up, but because I'm long on euro dollar, I see a possible rejection also on dollar Swissy. But let's see. Ilya is asking, what about dollar CAD? Japanese yen is very weak, where CAD is strong. Yes, you can do currency strength. Indeed, for that I use correlation matrix. So definitely, correlation matrix is one of the best currency strength meters there. And again, if you download correlation matrix from Admiral Markets Supreme Edition, you should be able definitely to see the real currency strength. Okay, so you can enter CAD yen here. CAD, Japanese yen. Okay, and here, Ilya, here and all others, CAD yen, you see, correlation. Okay, I will use daily correlation, 1 hour, 200 bars. Let's see, it's okay too. See, minus 96. So that is how you do it. This is the best currency strength meter. So guys, if you want to use correlations and true currency strength, this is it. And Ilya made it clear. Okay, this is true. So see, Japanese is weak, CAD is strong, and correlation CAD yen minus 96 with dollar CAD. So it means those two pairs are moving in totally opposite direction, right? Good question. Ahmed is asking, why the price does not respect trend, respect the POC zone more? The answer is simple, because the POC zones are institutional grade zones. Those are the zones where I think bank and prop traders put their orders to, and according to my knowledge of market and forex price action, course price always repeats in forex market, and that is why forex market trading is great, because you can estimate your entries around POC zones and still have 80% successful entries. Those are historical buyers and sellers. Of course, not just historical buyers and sellers, but also Camarilla pivots, EMAs, and Fibonacci retracement. Andy is asking, some people hate Mondays. They obviously don't trade. I'm going to change Mondays to Nen days. Long live Nenad. Thanks for everything. Thank you. Thank you very much for this. I really appreciate it. Nen days. Yeah, it sounds a bit English, Nen days. Yeah. Maybe it can be a new word in English. Excellent. Thanks a lot, Andy. Ilya, when people will learn that dollar Swissy is the mirror of euro dollar and cease to ask dollar Swissy setups? Well, yes, I mean, euro dollar goes always negative to dollar Swissy. So here we will see this example again. Add, save, and euro dollar, dollar Swissy, guys, totally opposite. Minus 98. This really means that those pairs are the opposite mirror of each other. They reject, so euro dollar up, dollar Swiss down. Very, very strong correlation, negative correlation. Paul is asking, do you use strips to decide when to sell on a rally? Yes, Paul. Paul, I use if the price is in downtrend. Okay, if the price is in downtrend, I always use fibs in a relation to my other tools. So yes, the answer is yes. For example, here, previous most obvious swing, I use fibs. So you see it's 88.6, 78.6. Those are the strongest fibs. So this is the POC zone quickly that we can actually take a trade in. So yes, I use fibs, but also fibs are placed as additional tool in my tool set for trading the price, indeed. So yes, I mean, everything is clear here. I think we covered it all. Let's see what will happen. Two trades are actually in place. Euro dollar, I actually went long at 1360, but this is still POC zone. You need to keep the stop. My risk for this trade is 1.5%. You need to calculate your risk before every trade. That is how you keep your trades profitable, and that is why some of expert advisors that are built on some strategies are profitable, because they know how to apply good money management. Also here, Australian dollar is also active. So I bought it at 76.50. Okay. Also 1.5% risk on these two trades. And for all other trades, if they're hit, my total risk will not go above 5%. Ahmed, please register a real account in Admiral and send me an email, and I will explain how to register, and I will send you the template. Then you need to register for a live Admiral Markets account, and yeah, everything will be where you will have a full support. So please do send me an email. Indeed, tomorrow is slow trading day, so I think that we won't see much of a price action for July. So that is why we still see a bit of slow price now today on some dollar crosses. Also, guys, pay attention to this Bitcoin, dollar, Ethereum, dollar, Litecoin, XRP, Ripple. This is what I will start to trade and analyze soon. So pay attention to currency and cryptocurrencies. Much better to trade than to hold as commodity, because if you hold it as commodity, the bubble might kill all of your profits. This will be much better to trade. So pay attention to. I will start doing it soon. Yeah. No, I mean, I'm trading. I have my positions now. Tomorrow will be a slow day, but yet again, at least I think price will respect POC zones for some pips, so you can still make some money, I think. Although don't make big positions tomorrow, indeed, because it's the 4th of July, bank holiday, of course. Okay. Raymond is saying, thanks for everything. Enjoy the rest of the day. Let's get these pips. Indeed, Raymond. And final last question is gold. Gold sell on rallies, heavy sell on rallies. We have, I think, an X cross here. Yes, almost an X cross. It's not the next cross, but almost an X cross. So let me just check. Yes, definitely price is moving down, but we might see some support here. 12, 20, 19, 12, 19. That is weekly support. So thank you for listening to me. Let's see what will happen now. I am long, so I have a long position on euro dollar. Stop is in place. Long position also I have on Australian dollar. Let's see. My trade, my risk is low, 3% for 2 trades. What will happen will happen. Let's see. Thank you guys for listening. Talk to you soon. Cheers. Expect you analysis. Have a great day, rest of the week, and let's take some pips. Cheers, everyone. Great day.